Good day, ladies and gentlemen. Welcome to my channel. Today is July 29th, 2023, and I'm going to discuss gold, silver, dollar index, and talk a little bit about macroeconomy. Let's start with gold as always. On a weekly basis, the metal price remained unchanged, which is largely what I anticipated. Following the breakout from a bullish wedge, gold had two options. First one is to immediately attack $2,000 mark or continue sideways. Unfortunately, gold's rally post-breakout was cut short, and here we are with a sideways price action. I discussed in my last video that we had to be patient for another 1-2 weeks, as gold needed to leave behind FOMC meeting with anticipated rate hike, as well as expiration of August gold futures contracts on the COMEX. By the way, a smackdown on gold price came just 1 day prior to the expiration of August contracts to ensure that most investors are underwater by the time contracts expire. Anyhow, as most of the August contracts were rolled over into December 2023, gold has a window to advance until mid-November without much hurdles. Presently, gold is finalizing the formation of the right shoulder. It took 3 weeks to form a left shoulder, 1 month to form a head, and now 2 weeks since it started the right shoulder. Look at the symmetry with sharp declines and reversals. Technically, gold could continue sideways price action a few more days, or latest until the end of the next week. Once gold starts to break the neckline of the formation, immediate target, in my opinion, is $2,050 level, which is going to happen just in a matter of several days. In a big picture, gold is forming a bottom around the lower band of the broadening rising wedge formation, with upside target of $2,200 level. Previous 2 cycles lasted 2 months, and given that gold bottomed on June 29th, I expect gold to trade around $2,200 level very late August, early September. Silver continues to consolidate gains just under the 3-year resistance, and when gold starts going, silver should blast through and exceed 2020 highs, reaching $31, $32 level by the time gold tests a long anticipated $2,200 mark. Finally, I would like to talk about US interest rates and how it affects US budget. It is apparent that interest rates are topping, as they are unsustainable with the US debt burden, which, by the way, increased by $1.3 trillion during 2023 only, and presently stand at $32.6 trillion US dollars. According to the data from July 27th, US federal government interest expenditures amounted $970 billion US dollars for the past 12 months. There is no way that the US Treasury keeps up with such level of interest payments in the long run, which will keep rising. And investors realize this. That is why they have been dumping US dollars since the start of a rate hiking policy by Fed in 2022. Decline in the dollar index is yet to come. In July, dollar broke the triangle formation, which is a continuation pattern, and over the passing week, it retested the upper band. We should witness the resumption of downtrend going forward. If dollar is falling with 5.5 interest rates, I cannot even imagine what is going to happen to it when Fed starts the printing press along with the rate cuts. This is it for today. Stay well and enjoy the weekend. Please note that this video is not an investment advice and prepared solely for educational purposes.